Yeah, thank you so much for joining me in this quick conversation. We're here live at the Japan Sea Market Forum, where you've been a panelist just now at a talk about really the impact of a lot of the geopolitics and in terms of investments globally. And you spoke at length about the opportunities, in particular in Asia, in Japan, and I wanted to start there.
Yeah, I mean, the room was full, wasn't it? It was packed.
It was
There's so
yeah.
much interest in Japan now, you can tell.
And they particularly love the whole marriage analogy that you extended even further, which is really apt. I think one of the best I've heard around that discussion. But maybe you can speak a little bit more to what specifically are the, I guess from a sector standpoint, perhaps, what are some of the opportunities you see in Japan, especially coming for, our audience are mostly investors in Southeast Asia, founders or builders in Southeast Asia as well. Like, what are some of the opportunities that they can tap into that you've seen?
Yeah, well, so as we were talking during the panel, Japan is back, and it's back in a big way in the sense that after 2 decades, Paolo, of being in deflation, it's out now. But so far, it's not been the good type of inflation. It's been more food prices and weaker exchange rates. So it's more costs going up. But going forward, because Japan is running short of labor, there's 2 things. One is you're going to see stronger wage growth going forward because labor is scarce. And the second thing I feel is Japan is really going to embrace AI and be a big adopter of AI, which will boost productivity. Right. So those 2 things, I think, can generate Japan, nominal growth could be somewhere between 3 to 4%, which is decent growth for profits, right? So that's kind of the big picture. And then, I think looking kind of more sectors, I think if the Bank of Japan has to start to raise rates, I think the financial sector is going to do well from that perspective. I think we're also going to see the housing sector do well, property. And then trading companies, we think, which have been doing well, will continue to do well. But, stepping back from that, I think the interesting thing is outside listed companies, the small companies, the startups. I think the younger generation, which are just starting to invest now overseas, they're the ones with imagination and they're going to embrace AI. So I see, a lot of startups and using the new technologies, whether it's for green energy, whether it's for biotech, whether it's just for, new innovations. I think there's going to be a lot of opportunities. So it's kind of getting into the weeds and looking for these type of companies. That's where you're going to find, I think, a lot of opportunities.
Right. I wanted to touch on the whole AI point, and Japan being potentially a huge adopter of it in the right way, and making the most out of the dividend from that to sort of close the gap in terms of the human capital that they need. Yeah. How do you see that impacting? I mean, there's a lot of talk about kind of this whole circular kind of economy or AI bubble in the US. Sure. And how does Japan playing a larger role in the AI ecosystem potentially, I guess de-risk a potential crash scenario or something to that effect?
Well, I would say the US is by far the leader in terms of being the enabler of AI. Right. The enabler in the sense that it's the Mag 7, it's these hyperscalers that are building these massive data centers that are needed for large language models and AI models and agents and so forth. So they're building, if you like, the AI infrastructure, right? But the next stage is who's going to use AI? Who's going to embrace it, adopt it to get all the efficiencies and the cost savings and even the alpha out of AI with new innovations? That's not necessarily the US. And that's where I think Japan can come in, because Japan has the ultra reason to do that. It's running out of labor. It's literally running out of labor. And it needs labor saving investments. Yeah. And that is AI. So I there is the circular argument that maybe there's been too much investment in AI and it will take time to see the returns. Right. that could be true. We'll see. But in terms of where those returns are going to come from, I think Japan is a good opportunity
Right.
where you'll see those returns.
Yeah, I think AI has really, I guess, in some ways lacked a huge spender, and so like a lot of the capital to fuel a lot of the investment in AI has come from like other kind of like funders or investors, and so having a huge spender in the form of the Japanese market might make a difference there. I also want to talk about the whole idea of techno-nationalism and how I guess in a more fragmented world, there's a lot more interest in developing a sort of independence. And we see that a lot with China. How do you see that unfolding, or is it more of a cyclical thing where, I guess in the to take the marriage analogy, you'll have kind of a realization after the long fight, like, oh, we shouldn't have been fighting all along. We should get back together, or do you see it really being like a point of no return kind of?
Yeah, we talked on the panel about the marriage analogy of
Yeah.
China and the US being
right.
married.
Yeah.
It's not going so well, but they can't get divorced because they're so interlinked,
Right.
which is very true. So, right now, I think there is this strategic decoupling happening between the two world superpowers where, you can think of the US has kind of got the chips, which is the new oil, but then you can think about the rare earths that are needed to build the chips, and that's
in China. Yeah.
Right? So they've got this marriage where they can't leave each other.
Right.
And but even more broadly, I think you talked about what's happening is there is a move towards economic nationalism, is what I'd call it, right? In terms of all countries want to secure their supply chains. They're becoming more concerned about the future. It used to be just-in-time inventory management. Now it's just in case. There's, I think, a lot more security concerns when it comes to economics. And so that is going to raise costs over time. It's not as, we used to have free trade, free investment. Now it's getting a lot of restrictions and there's a lot of clogs in supply chains.
Right.
So that's not good for efficiency and costs. They will go up. Costs will go up, efficiency will go down. The big savior to this, as we were talking before, is AI, right? So again, this is another big reason why AI really, really needs to succeed here.
Yeah, and that closes the whole discussion, kind of full circle. And then just to wrap things up, I wanted to get your thoughts on, like how you see the future of, I guess, especially private markets in Southeast Asia. I think, coming from a Southeast Asia investor, there's a lot of pressure these days to, prove returns, especially for those that have the thesis on startups for the longest time. And we see a lot of firms either, kind of like expanding their geographical focus to generate those returns, or, venture into other kind of like multi-asset kind of strategy to generate those returns as well. What has been your view on, like, I guess not even Southeast Asia alone, but other emerging markets in terms of how they've been able to drive kind of returns from venture and that particular asset class?
Well, I think what we're seeing, Paolo, is more diversification, and with public markets now quite rich in some of these DM economies, there has been this move towards private markets to alternative assets, right? And I think what I would say is even, these alternative assets like crypto or gold, prices are already high as well. So I feel that the next stage is going to be a renewed focus on emerging markets.
Right.
And Southeast Asia is a great candidate for that, right? Young population, low labor costs, huge opportunities in terms of infrastructure investments. I could go on.
Yeah.
And I think, where a lot of the capital will actually come from as well is not just the West where it's traditionally come from, but actually in its own backyard, Northeast Asia, which is cash rich. Countries like Japan, like Korea, like Taiwan, even like China. Older populations that are now reached the level where they've saved money, but they need to put it to work. So I think you will see capital flowing from north to south, and that they will create a lot of opportunities, investment opportunities in Southeast Asia emerging markets.
Right. On that note, thank you so much, Rob.
Thank you, Paula.
Thank you for doing this.